Ready?
Okay, you can go now.
Okay. Hello, everyone. This is Kathy Lien with BK Forex. I want to thank all of you for joining me this morning for our live trading non-farm payrolls preview. And it's not live trading, it's just non-farm payrolls preview. We've had a tremendous sell-off in the US dollar. And that's because in the run up to non-farm payrolls, we're getting a lot of reasons, a lot of indicators that lead us to believe that payroll growth will not be that great. That payroll growth could actually fall short of expectations on many fronts. And that is definitely playing a role on the psychological element of the markets right now. The dollar is down 1.5%, which is a pretty steep slide. Looks like it wants to make a run for it looks like it wants to make a run for 115. And it's because, first of all, the dollar ran up quickly and aggressively. On top of that, we had, market participants consider the Fed's hawkish stance and look for up to 3 rate hikes this year. But we had the FOMC minutes released earlier this week. They weren't that optimistic. And, so they weren't that optimistic. The Fed basically hinged its rate tightening cycle on the promise that Donald Trump is going to deliver. And, this is obviously a big promise. And even, the experts aren't sure, whether or not he's going to come through. So, that's something that is worrisome, because if he doesn't come through, then, the Fed's not going to be able to raise interest rates 3 times in a row. Now, we don't know yet. So the only thing that we can operate on is basically data. And we're in kind of a show me environment right now where the markets needs to see evidence of stronger data before actually, pressing forward with driving the dollar higher. And unfortunately, they're not getting that. The leading indicators for NFPs have been very soft. They've been wonky. They've been worrisome. And so, that's something that, we are obviously watching very closely as well. So, taking a look at non-farm payrolls, we always, look at a variety of leading indicators for non-farm payrolls. And they range from anything from the ISM numbers to confidence to whatnot. And you're going to hear some hesitation in my voice right now because I'm watching the markets. I'm in a whole bunch of live trades for our BK members. And so, that's obviously our top priority, which is the the trades that we have on for our members. But anyway, non-farm payrolls, let's start with the projections. First of all, market's looking for decent job growth, 175,000 versus 178,000, which is really not too much of a change. On top of that, they're looking for wage growth to rebound quite a bit. Sorry, I need to see where yields are right now. They slow down a lot. They need to see wage growth. They want to see wage growth rebound quite a bit because the previous month wage growth was very weak at minus 0.1%, and they're looking for unemployment rate to tick up. So, all of these are, for the most part, except for the unemployment rate, which is expected to tick up because labor force participation is likely to be increased. We're basically looking forward to an overall stronger report. But the leading indicators do not show that. Even today, we had Challenger Gray and Christmas report a 42% rise in job losses, which is the largest month of increase in job losses since September. Also, looking at ADP, ADP also fell quite a bit. And so ADP fell quite a bit from 215,000 to 153,000. This is the weakest level that we've seen ADP in 2 months, so it's actually not so bad. Jobless claims was the primary good news, where jobless claims actually increased. Improved from 263,000 to 235,000. Sorry, once again, we're in a live dollar yen trade, so I'm going to want to kind of watch this, see if we make it through to 115. We got our targets at 115, 25. Yields are down quite a bit, but I'm not too sure this, we're going to London close. Either means we're going to have a big flush or we're going to have some reversals. So I think I'm just going to, for our members, I'm just going to bank our 20 pips when we get it here. And then ISM non-manufacturing index, that was very, very good. But if you look at the details of the report, which I'll pull up just a minute. Sorry, once again, in these live trades that, all right, we're coming down here. I've got my TP at 25. Let's see if we get it. I think I'm just going to close it at plus 26, 27. All right, I'm out of the trade. Sorry. Once again, yeah, Thursdays always seem to be a very busy day when we have these webinars, and our top priority, as I said, is trading for our members. Okay, so I'm out of that trade, so you have more of my focus, although I'm still watching for new trading opportunities. So anyway, the employment component of non-manufacturing ISM dropped to 53.8, which is a pretty steep decline, 4.4 points. So a pretty hefty drop here that suggests we may very well have a weaker non-farm payrolls report, because the employment component of non-manufacturing ISM tends to have the strongest leading indicator for NFPs. Aside from that, we also look at some other readings, which I'll bring up in just a second. We also look at confidence measures, the University Admission Consumer Sentiment Index. Let's just get all the data on the table here. And then we're going to sort by alphabetical order. The Consumer Confidence Index was very strong. Obviously, the Trump stimulus drove consumer confidence very high. That was actually the strongest consumer confidence reading since 2001. And then we also look at the UMich survey. UMich sentiment index, no surprise, also huge rise, 12-year high in UMich. All thanks to the promise of his Trump stimulus program, which just seems to be what everyone is focusing on these days, rightfully or not. And then we have the non-manufacturing ISM report. And that employment component actually increased. So manufacturing sector actually saw stronger job growth. And then we're going to look at our weekly jobless claims, the historical stats. And what you'll see is that 4-week average jobless claims are low, but if you compare them to either the first week of December or the last week of November, depending on how you look at it, we're actually up in 4-week jobless claims, and the continuing claims are higher. So pretty much everything except for the confidence numbers and the ISM non-manufacturing numbers points to a weaker non-farm payrolls report. So obviously that's quite concerning and something that we are watching very closely. Sorry. Okay, so I mean that's basically what we're looking at. So we've got the forecast for NFPs. How do you trade NFPs? Well, all of the leading indicators suggest that non-farm payrolls is going to be softer. So the safest bet, probably the lowest vol, would probably be to sell dollar Swiss. Dollar Swiss got a bit of support at 1.0080, but once it blows past that, we could even hit parity in dollar Swiss. Dollar yen, I think it's headed to 115, but we're going to need a soft number to break through 115. Euro is the most vulnerable short covering, but we're pretty much near highs. I think dollar Swiss and Aussie dollar for a run up to 74 cents are my favorite trades. But obviously, what we really hope for is tonight some sort of bounce so we can sell at better levels. Trading non-farm payrolls is always risky. So, we're going to be live trading it reactively with our BK Forex members. And that's probably the only way we're going to be trading NFPs. I don't envision us to be floating a live trade beforehand unless, some people for their own positions are bold enough to actually take a they're actually bold enough to take a position that is somewhat different from what we recommend, which would obviously be a trade that is a trade that's actually negative dollars going into the NFP report if we, so happen to get a really good price. So my favorite, maybe overnight, if we get in the next couple hours going into Asia, because I think we're going to get another continuation move in Asia, would be actually to sell dollar Swiss if we're so lucky to get it in the 40s, 101.40. I don't know if we're actually going to get there, but that would be a decent trade in my opinion. But pretty big moves going into the payrolls report. I watch yields very closely, and I can tell that yields are still down quite a bit, and that most definitely points to a further decline in the dollar. Okay, so selling dollars is still the right trade, but we're deeply oversold, so we want to get a little bit of a bounce. We'll have to see if we're able to get any type of bounce, but I very much like to sell dollars in general. Any questions? Any questions about what we expect for non-farm payrolls and how we could potentially trade it? I actually watch yields very closely, and they're a nice little leading indicator for price action. I do think that we're going to run for 115 in dollar yen before NFPs maybe. The dollar may go up Monday, but we still have 24 hours until non-farm payrolls, and I think that it may end up lower on Friday, or at least lower post NFPs. Any other questions? All right, if there's no additional questions, I'm going to get back to trading with our members. You can always check out our services at bkforex.com. I encourage you to do that. I'll just pop up the website here so you can see what we're talking about. And we're trading actively with our clients, every single day. And we've got a live trading room. Look at that. I can't even spell it because I'm so busy looking at the markets. And you can interact with us every single day there at bkforex.com. And, lots of good information on the site. All right. Thank you so much for having me. We'll talk to you all later.